A city built on nothing but water, wood, and mud became the most powerful financial force the world had ever seen. No vast farmland, no gold mines, no mighty armies. Just marshland that floods twice a day. And yet, for over 500 years, Venice controlled global trade, financed kings, toppled empires, and created the financial architecture that runs your life today. How? They discovered something that armies and emperors never understood. The most powerful weapon in the world is steel. It's trust. And if you can organize trust, if you can turn it into a system, you can control everything. By the end of this video, you'll understand how Venice invented modern finance, turned public debt into a tradable asset, and proved that power flows not from conquest, but from contracts. And you'll see how that exact same system is being used to control you right now. Let me take you back to medieval Europe. The year is 1100. The continent is ruled by feudal lords who own land, command armies, and extract wealth through force. Power is physical, brutal, visible. But in the lagoons of northeastern Italy, a different kind of power is being born. A power that doesn't rely on land ownership or military conquest. A power based on something far more subtle and far more dangerous. The ledger. Venice shouldn't have existed. Geographically, it's absurd. A collection of islands in a swamp with no natural resources, no defensible position against land armies, no agricultural base to feed a population. The people who settled there were refugees fleeing barbarian invasions. They built their city on wooden posts, driven into the mud. Every stone, every piece of food, every resource had to be imported. By all logic, Venice should have remained a backwater fishing village that disappeared into history. But the Venetians understood something profound. They understood that in a world where everyone else was fighting over land, there was an entirely different game to be played. The game of movement, the game of information, the game of trust. Rule number 1 of the Venetian system. When you can't win by force, you win by knowing more than everyone else. Venice positioned itself at the crossroads of East and West. While European knights were busy killing each other over territories, Venetian merchants were quietly building trade networks that spanned from London to Constantinople to Alexandria. They didn't conquer, they connected. And connection is more valuable than conquest because it creates dependency. If you control the flow of goods, you control the flow of information. And if you control information, you control markets. You know what's scarce before anyone else. You know what's valuable before prices adjust. You profit from the gap between what something is worth here and what it's worth there. This is the original arbitrage, the original information asymmetry. And Venice mastered it. But here's where it gets interesting. Venice didn't just move goods, they moved something far more powerful. They moved money without moving metal. This is rule number 2. Separate money from its physical form and you unlock infinite power. In the medieval world, money was gold and silver coins, heavy, difficult to transport, dangerous to move across bandit-infested roads and pirate-filled seas. The Venetians invented a solution, the bill of exchange, a piece of paper that represented a claim on money deposited elsewhere. You could deposit gold in Venice, receive a note, travel to London, and exchange that note for gold there. This seems simple now, but at the time it was revolutionary. It turned money from a physical object into a ledger entry, an abstraction, a promise. And once money becomes a promise, you can do something incredible. You can create more promises than you have gold to back them. This is the birth of fractional reserve banking, the realization that as long as everyone doesn't demand their gold at the same time, you can lend out the same gold multiple times through paper promises. Venice had discovered financial alchemy. They could multiply money without mining a single ounce of metal. But the real genius wasn't just the bill of exchange. The real genius was what they did next. Rule number 3, turn the state's debt into an asset and you create a perpetual power machine. In 1262, Venice was at war. Wars are expensive. The government needed massive amounts of money to fund fleets, pay soldiers, secure trade routes. Traditional financing meant taxing the population. But there's a limit to how much you can tax before people revolt. So Venice invented something that had never existed before. They turned government debt into a tradable asset class. They called it the prestiti, forced loans from wealthy citizens. But here's the genius. Instead of just taking the money and promising to pay it back someday, they made the debt transferable. You could buy and sell these government IOUs on a secondary market. This changed everything. Suddenly, lending money to the state wasn't just a patriotic duty or gamble. It was an investment, an asset, something that could generate returns and be traded for profit. The wealthy elite of Venice now had their fortunes directly tied to the state's survival. If Venice prospered, their bonds appreciated. If Venice fell, their wealth disappeared. This aligned incentives in a way that had never existed before. The richest and most powerful families in Venice had a vested interest in ensuring the state succeeded, not out of loyalty, out of pure self-interest. Sound familiar? This is the blueprint for every government bond market in the world today. US treasuries, European bonds, Japanese debt. It's all the same system that Venice created 800 years ago. When governments borrow money today, they're not borrowing from enemies or foreigners who want them to fail. They're borrowing from institutions and individuals whose wealth depends on the government's ability to keep paying. This creates a closed loop, a circular system where the creditors and the debtors are the same people, where default becomes impossible because the people who would lose the most are the people with the most power. The debt never gets paid back. It just gets rolled over forever, exactly like Venice designed it. But Venice added one more layer that made the system truly unbreakable. Rule number 4, make risk calculable, and you can sell fear itself. Venice invented modern insurance, not the concept of sharing risk that existed before, but the mathematical framework for pricing that risk. Venetian merchants were sending ships across dangerous seas, storms, pirates, unforeseen disasters. Each voyage was a gamble, but the Venetians realized that while individual outcomes are unpredictable, aggregate outcomes follow patterns. If you send 100 ships, you can predict with reasonable accuracy how many will sink. And if you can predict it, you can price it. And if you can price it, you can sell it. They created the first maritime insurance contracts. You pay a premium. If your ship sinks, you get compensated. If it doesn't, the insurer keeps the premium. This sounds obvious now. But this was the birth of probabilistic thinking applied to commerce, the birth of turning uncertainty into a commodity. And once you can commodify risk, you can build entire industries around it. Insurance, derivatives, futures contracts, betting on outcomes without owning the underlying assets. Every hedge fund, every insurance company, every financial derivative traded today traces its intellectual lineage back to Venetian merchants pricing risk in the 1300s. But here's what they really understood. Insurance isn't about protecting against loss. Insurance is about transferring fear. You pay someone to carry the emotional weight of uncertainty so you can focus on profit. Fear is expensive, and if you can sell peace of mind, you can charge whatever price the market will bear. Rule number 5. Accounting is power because narratives are controlled by whoever writes them down. Venice invented double-entry bookkeeping, the system where every transaction is recorded twice, once as a debit and once as a credit, ensuring the books always balance. This seems like boring technical stuff, but it's not. It's a revolution in control. Before double-entry bookkeeping, financial records were chaos, lists of transactions that could be manipulated, altered, or simply lost. There was no objective way to verify if a business was profitable or a merchant was solvent. Double-entry bookkeeping changed that. It created a standardized system for truth, an objective ledger that couldn't be easily faked. It turned financial reality into something that could be audited, verified, and trusted. And trust is the entire game. When you can prove your solvency through auditable records, you can borrow at lower rates, you can attract investors. You can scale your operations beyond what any individual fortune could support. This is why modern corporations exist. This is why capital markets function. Because we have standardized ways of recording financial truth that everyone agrees to trust. But here's the dark side. Whoever controls the accounting standards controls what gets counted as real. If you control what gets measured, you control what gets valued. If you control what gets valued, you control behavior. If you control behavior, you control society. This is why governments and corporations fight so hard over accounting rules, why GDP calculations matter, why inflation metrics are political, because the numbers we use to describe reality shape the reality we inhabit. Venice understood this 800 years ago, and they used it to maintain power for half a millennium. So why did Venice eventually fall? If their system was so perfect, why did they lose their position to Amsterdam and then London? Here's the brutal lesson. Systems that become too rigid, too closed, too protective of their existing advantages eventually get disrupted by hungrier competitors willing to innovate. Venice became a closed oligarchy. The same families controlled trade, banking, and government for generations. They built walls to protect their monopolies. They restricted who could become merchants. They outlawed innovations that threatened existing power structures. And while they were busy protecting yesterday's advantages, Amsterdam was building tomorrow's infrastructure. The Dutch created joint stock companies that allowed anyone to invest in trade voyages. They built more efficient ships. They embraced innovations Venice rejected. London copied Amsterdam's innovations and added imperial military power. They combined financial sophistication with naval dominance. And they built an empire that dwarfed anything Venice ever controlled. But here's what's important. Amsterdam and London didn't replace Venice's system. They scaled it. They took the Venetian blueprint for organizing trust, turning debt into assets, pricing risk, and controlling accounting. And they made it global. The Bank of Amsterdam, the Bank of England, the London Stock Exchange, the insurance markets at Lloyd's of London, all of it traces directly back to innovations Venice created. And today, Wall Street, the Federal Reserve, the World Bank, the entire global financial architecture is built on that same foundation. When you take out a mortgage, you're using a Venetian financial instrument. When you buy insurance, you're participating in a Venetian invention. When your government issues bonds, it's using the prestiti system Venice created in 1262. The names have changed, the scale has expanded, but the game is identical. And here's what you need to understand. This system was designed to concentrate power. It was designed to align elite interests with state survival. It was designed to make debt permanent, risk tradable, and financial truth controllable. It wasn't designed for your benefit. It was designed to extract from you. You are not a participant in the system. You are the resource being harvested. When you deposit money in a bank, you're giving them permission to lend out 10 times that amount through fractional reserve banking, Venetian technology. When you pay insurance premiums, you're paying for someone else's peace of mind, while they profit from your fear, Venetian innovation. When your government goes deeper into debt and you're told not to worry because bonds are safe, you're being sold the same story Venetian citizens were told in 1262. The system works, but it works for them, not for you. So what do you do with this knowledge? You recognize that financial power doesn't come from armies or land. It comes from organizing trust. And right now, your trust is being organized against your own interests. The Venetians proved that contracts are more powerful than conquest, that ledgers are more valuable than land, that whoever controls the narrative controls the outcome. And in our next video, I'm going to show you the 5 financial tricks governments use to keep you broke. The silent taxes, the hidden transfers, the systematic theft that happens in plain sight but remains invisible because you were never taught to see it. If this video showed you a pattern you can't ignore, leave a comment with these words. Trust is organized power. Share this with someone who still thinks banks work for them. Because the greatest scam isn't theft. It's convincing you that the cage is freedom. History has the answers. I'm just showing you where to look. See you in the next one.